Good morning, trade pros. Welcome to our morning market update for Monday, June the 4th of 2018. This is George Papazov from Trade Pro Academy. We got an exciting one for you today. There's a lot going on this week and next week in the market, so we're going to recap it. We're going to go over the economic calendar today. We're going to talk about some news that happened over the weekend, and hopefully you had a chance to relax, get some rest. It's a busy week ahead this week, and it gets even more busy next week. Next week, we're going to have a lot of volatility-driven events, and we're going to recap all that today. All right, so we're going to get you prepared for the week. First and foremost, in Asia, Japan's up 1.4%, Hong Kong's up 1.7%, China up 0.5%, and India down 0.6%. So overall, Asian equities are off to a really bullish start. As of last night's Asian session, open around 7 to 8 p.m. Eastern, and markets are picking up steam. So in Europe at midday, London's flat at the moment. Paris is up 0.9%, so almost a 1% rally out of Paris as well. And Frankfurt up 0.3 of a percentage point, or 1/3. So all in all, European equities are also gaining some traction, but less than the Asian session. Looking at the futures here in the United States, Dow Jones is up 0.5 percentage point, S&P is up 0.4%, and NASDAQ is also up 0.4%. So U.S. equity is also up a little bit in the overnight session. Asia is leading the way. Morning, Marky. Nice of you to join us. All right. Crude oil is down 0.6% today to 65.39, which is really interesting because at the same time as crude being down, the U.S. dollar's down also, and gold's down as well, and Bitcoin. So all these other alternative assets or these safe haven assets are down as equities rally, including the U.S. dollar. So that's a little bit of something that's interesting to notice. Crude oil should have a little bit more life given that the U.S. dollar is weak. However, in crude, we talked about this in our Market Analysis Live webinar, which is for all subscribers every Sunday at 8 p.m. Eastern. We talked about what's driving the sell-off in crude, and I don't think it's over yet. I think we got some ways to go to the downside over the next little bit. All right, news here this morning, 10 a.m., we got factory orders out of the United States, and that's it. 12:30, we got the TD Ameritrade IMX release, which is not really market moving. Neither is factory orders. In fact, it's a slow start to the week. The next thing that's going to drive markets here is, I'm just looking, the United States ISM non-manufacturing tomorrow at 10 a.m. Other than that, what do we have? We really don't have many big news out of the United States this week. 10:30, we got crude oil inventories Wednesday, June 6th. June 6th is a very important day of the year, not just because of crude oil inventories. What else? That's all we really got in terms of this week's economic calendar. Next week, though, things are really going to pick up. Next week, listen to what we got next week. All right, June 12th, we got the North Korea-United States Summit. June 13th, we got a Federal Reserve rate hike, FOMC outlook and projections, the Federal Reserve dot plot, and economic outlooks as well. So that's going to be a huge day, Wednesday at 2 p.m. All right, we also have G7 meetings this week. June 22nd, we have the oil meeting in Vienna. OPEC and non-OPEC producers are going to meet and discuss whether or not they're going to increase their production. They have an output freeze. If they do increase production, that's going to catch the market off guard because we're expecting it to end by the end of December this year. That's 6 months early. They're going to increase output. That's going to have bearish consequences for oil prices. So I'm going to talk about market seasonality in a little bit, but I'll tell you this much. This is not like your every year June. There's a lot of volatility baked into this June with a lot of potential for movement. All right. That being said, though, we are in summer markets. So in May, the month of May is a 0.2% average return going back to 1964. Right. If you guys want to look at the seasonality chart I'm referencing, there's a link in the description below. I strongly recommend you look at it. We did a really good blog post on stock market seasonality. And tonight at 8 p.m., we have a webinar on how to use stock market seasonality to your advantage using options and how to generate weekly income with low risk and high probability. So I would strongly recommend you get on that webinar. That's also in the description. All right, guys. And then obviously July, we get a little bit more return, about 0.5% in the S&P, and August and September are negative months. August and September are the only two negative months out of the year for the S&P 500 going back to 1964. All right. Isn't that the George Orwell book? Is that what it's called, 1964? Anyways, I think it is called 1964. 1984. I don't know. It's a really good book by George Orwell. Just can't recall it at the top of my head. All right. This morning, markets are flashing green ahead of a G7 summit this week. Also, we have the Apple's WWDC Worldwide Developer Conference. I have to go to my recall center for that. That's coming out of Apple today. So look for news around Apple. These WWDC events are usually bullish for Apple. Bullish Apple means bullish NASDAQ, bullish tech stocks, bullish pretty much everything across the board. So watch Apple. There's going to be a lot of volatility in that stock today, driven by the developer conference. And there's a lot of these websites, a lot of tech blogs that tweet by the second developments of the developer conference because they're there and they're tweeting as they're attending. So there's going to be a lot of ample news sources that cover this event. Watch for it. Look how Apple reacts and look for that to push and pull the market either way, because there's a lack of volatility today due to lack of news, lack of economic events. All right. The trade war hits a little bit of a snag with Donald Trump. Donald Trump this morning tweets, China already charges a tax of 16% on soybeans, and Canada has all sorts of trade barriers on our agricultural products, not acceptable. All right, this comes after some commentary out of this weekend that this trade war may just be back on. I think this is the one of the underpriced events of the S&P 500 at the moment, is that we had the announcement of a trade war. The market slumped. It recovered on news that it may not happen, and now it looks more likely than ever, and we're discounting this event a little bit. So that's the one area I tell you to be cautious about going into this bullish market. We're going to have a little bit of upside, I think, today and tomorrow, followed by a midweek reversal. That's what I'm watching for, because these volumes on the upside are pretty pathetic, and it could be two reasons. The first reason is short sellers are just covering, so they're getting squeezed out of the trades. There's no real buyers. That's why volume's weak. Or number two, and it could be either or and both, it's summer hours, summer volatility, summer operation, which means less volume to begin with. All right, so it's a little bit reduced volume, reduced volatility. It could be any and or either of those two things, and I think they're both coming into play. All right, so today's market, look for the upside. You can't really get on the downside yet. On the open, look for any sell-offs as an opportunity to get yourself long. And if the sellers come in charge and take over and you see heavy volumes on the downside, then you got to flip. All right, it's great to have an idea, but it's even better to let go of that idea as quickly as possible, because it's not your idea that makes you money in trading. It's the market is going to move and whether or not you're going to be on board. You know, there's a really, like, in society, we try to present an image of leadership that's like being different, being out there, being a leader. In trading, you're not being a leader, you're being a follower. If you want to lead, go start, I don't know, a space exploration company and own an electric car company at the same time. Do some of that stuff. Do some exciting stuff. Don't trade if you want to be a leader. You got to follow in trading. You got to follow the trend. All right, guys, that's what I got for you today. At the risk of ranting on further, I got to say, have a good day. No real big economic events. We got to try the upside early on in the trading room. Webinar tonight at 8 p.m. It's going to focus on running a summer options income strategy. It's a weekly strategy that's passive income. You basically just spend 1 to 2 hours a week overall and generate cash flow. And the summer is a perfect time to do it. And I'll show you exactly how to do it, plus my little tip and trick on how to decide where to set the option spread, because that's the misleading part that many people won't tell you. All right, how to unwind the option trade, when to decide it's time to close it out, when to add more, when to manage it, when to blow it out, how to set it up, etc. All right. You guys have yourselves a great day. See you today at 8 p.m. Eastern. Links in the description below. If you want to read about stock market seasonality, that link is in the description below as well. If you guys have any questions, pop in the box. We'd love to help you out. Have yourselves a great day. It's a Monday. Let's get out there and trade. Let's start out slower. Let's look for lower volatility, lower volume, less trades. Let's be more disciplined, more focused, more patient, and let's take money quicker, profit quicker today. And that's the mantra. All right, you guys have yourselves a great day. Manage your risk, TRADEPRO. See you tomorrow morning at 9 a.m. Gents, any last words you want to include? Mark said, let's get it. That's perfect conclusion. Let's get it. See you guys tomorrow. See you later, guys. All right, trade pros. Let's look at some levels here. Vic, do you want to do NASDAQ today? That's the kind of excitement I'm looking for. Yeah, sure.